The next speaker is Dale St. Clair, and she has over 25 years of experience as Chief Investment Officer, Business Advisor, NASDAQ Board Director. She managed several global businesses with P&L responsibilities and serves on several companies' boards, including Verticlean Fuels, as an independent board director and audit committee member. She co-founded Williams Capital. This is the largest women-led and minority-owned broker-dealer investment bank in the United States. Dale is a Chief Investment Officer at 06, a leading platform to digitize the creation of carbon credits. She experienced in alternative investments and managing highly regulated companies with P&L responsibilities as an energy and utility investment banker and investor. Dale's focus includes reducing methane gas and CO2 emissions. She has demonstrated track record of climate advocacy and using emerging technologies, including AI. So this is very hot topics, especially in energy sector. How do you think nuclear can play a role in environmental justice aspect? And elaborate a bit more.
Thank you for the question, and thank you for having me here. The opportunity for nuclear energy today, we are in a pivotal moment, and Charles spoke well about where we are today and that it's not a science problem, and yes, the technology exists to scale what we all know is the cleanest energy source. So knowing that fact and taking it down to specifics with today and addressing specifically investor capital and economic justice, I've been investing, have the privilege, frankly, of been investing for actually 28 years. And I started my career at New York City Public Pension Fund. New York City Public Pension Fund, back then, it was and is and still is doing what today's world is more widely known as ESG matrix. It's not new at all. And in the public pension space and frankly some of the endowment and foundation space, these are investment parameters and matrix that drove investment decisions for decades. So fast forward today, it's very exciting about the broader scope of knowledge of ESG, and I'm specifically speaking about the E, the S, and the G. The E is driven by climate and nature and biodiversity. The S is very much driven by economic justice, by jobs, by having all stakeholders at the table. And I was particularly excited about what happened this past Saturday, which Elena referenced, with 30 countries, soon to be an additional 20, and the number of LDCs, the number of emerging economies that heretofore have never had a seat at the table. And that was frankly part of the issue. We're drawing uranium, for example, from countries, given that is a core element of nuclear energy, but not having a conversation with the communities and the impact on the communities. So, and the governance, self-explanatory in terms of a structure to do things right. Since 2015, we now have the UNPRI goals, more institutional investors, and quite frankly, more family offices who seek to invest in a similar fashion. I always go back to the UNPRI goals as a baseline. From that perspective, one can draw from 1, 2, or 3 and always tie in value. So back to financing. Blended financing is topical, and there isn't one investor any part of the world where this is not a topic. And if we look at the spectrum of financing, you have 100% philanthropy on one side, 100% financial returns on the other side, and percentages in between. And I can tell you, and maybe most of you know, that 100% financial returns, yes, you also can achieve ESG matrix. So there's no question that you can do both. The question is how much of both. And so I drive back to understanding the risk appetite of the investor, and blended financing, you have a mix of institutions and frankly large family offices, some family offices that are larger than endowments and foundations just because of the hundreds of years of wealth, and they are focused on mission-driven investments, sustainable investments. So the education of nuclear energy is the key component, and why I'm so excited that all of you are here and to be speaking with you, because it's the education of nuclear energy, what it can do, what the technology is here. There are dollars seeking these solutions. And so understanding blended financing, understanding that quite frankly as a structured finance banker, everything can be structured. There's nothing that can't be structured. at all for any investor. I won't go into details. Yes, it's complex, but the good news is that there are guys and women and all types of individuals that know how to do that. So capital is here too, and now it's combining the interest, the capital, the returns. Thank you for your time.
What are the trends in new kinds of financing that make it easier to find large nuclear projects? And that actually returns to Dale's point on appetites for return and how to make it attractive for, right now we invest short-term getting into game only if we expect return in a year or 5, but with nuclear it usually takes a decade before we get anything back. So with alternative financing and this like new trends, how we can instill those money coming into nuclear sector, giving those returns coming not so soon?
An example to directly answer your question, I'll just stick to something more specific and dovetailing on Lena's remark. Blended financing includes a combination of equity as well as loans. Prosper Africa, which is a U.S. organization and has a mandate to deploy capital directly on the continent, that's all 51 countries. The point is, that's one example of a lender. There are many lenders, frankly, globally, most of them are government sponsored, that are looking for homes. Most of them are going to do 5% of first loss, so you have your first loss loan fund that does take away some risk for individuals that don't have that risk appetite, and you combine that with equity investors, and you essentially, as I said before, there's nothing that can't be structured. But I do see opportunities in blended financing, and I do see opportunities with entities like Prosper Africa as addressing part of this gap in terms of financing today, tying it into the benefits of nuclear energy.
We have the wheel, we have ideas, we already kind of put together the structure. What can we learn from failed projects, like unsuccessful projects, to make sure that this initiative gets us where we want to be and we get as much as homework done before we jump into new project?
I'll jump in, and a full disclosure, I invest across the energy stack, including nuclear. And the failed projects across the energy stack, no surprise, is financing. And I'm also a middle market, meaning mid-sized company investment banker, exiting the company that I co-founded 7 years ago, Williams Capital, which highly successful company, largest women minority-owned investment bank today. I exited to focus on climate tech and fintech and had to go down the capital stack, meaning leaving the private equity, robust middle market world down to the land of venture capital, which is not as structured as private equity. But the good news is that there's significant interest in tech, and by the time I did it 7 years ago, the venture capital world I see is bifurcated. And so the blended finances that I was sharing earlier, patient capital combined, is really more of a private investment vehicle, not the traditional private equity, not the traditional venture capital. And so having, frankly, mentored founders, because I am one, I have been one, and it's not that much different speaking to anyone starting a project finance. I mean, that's a company. It has a P&L. One can't look at it any other way. So you are founders in the project financing world, and there are basic fundamentals of starting companies. There's a lot of first-time founder mistakes that happen all the time. So I don't have a secret sauce, but there are frameworks for founders. There are frameworks for projects, including nuclear. I mean, honestly, the framework for energy project financing is very similar. And the good news is that there are now tools to help founders start from the beginning. Every banker who's really seriously interested in advancing climate tech and climate investment funds, they're not the traditional bankers. They do want to be involved early. And there's, quite frankly, a number of firms, large and small, that specialize in it. So I'm very excited about this decade. And I think the biggest difference today that didn't exist before is technology. And I absolutely believe that technology is, frankly, one of the key missing ingredients when we think about scalability combined with finance and nuclear energy.
Talking more about the newcomers, and I think how can we assure lenders to invest in particular area or particular region, taking into account all the challenges we have with currency that might be having hyperinflation at some point, how we work with those areas, especially in global south, in developing world?
I'm going to really dovetail, frankly, what Elena just said. She was speaking about the holistic approach. That is the approach with the emerging countries. As I said at the beginning of our panel, Saturday was an example of emerging countries having a seat at the table when they heretofore did not. I'm not a policy person, but I do think the framework now exists for emerging countries to communicate, whereas before that wasn't the case, and uranium's a prime example as an element coming in and being mined and not factoring in the impact on the individuals and communities. We recognize certainly the licensing element. Many emerging countries aren't staffed to go through that process and rely on the developed countries too. There is a gap there. I don't have a lot of solutions about filling the education gap, but I do think the framework now exists where at least leaders in emerging countries and all stakeholders are being asked or at least have an opportunity to speak, and hopefully that will address part of the issue.
Thank you, everyone. Thank you, our panelists.